Hi, this is Terry Ryder. I'm the Terry in Terry's Tips, and this is the video version of Terry's Tips, which we send you every month as part of your subscription to Property U. It contains lots of really useful and essential information that I think that you as real estate consumers need to know to help you be more successful as property buyers and sellers. So highlights in this month's edition of Terry's Tips include an item which talks about the importance of doing really thorough due diligence before you buy property, because there's been some research conducted by ME which finds that most people only spend a very small amount of time inspecting the property that they buy. And there's a host of reasons why people don't spend enough time inspecting the property before they spend hundreds of thousands of dollars on that property, including they fell in love with it and they overlooked the need to be thorough with their due diligence, or they lacked experience and skill in inspecting property, or some they were just fed up with looking around and they're impatient, so they found something they kind of liked and they went ahead and bought it. So about 60% of people spend less than an hour inspecting the properties they buy. And the research also found, not surprisingly, that many of those people find later that there are problems with the property that they didn't detect because they didn't undertake enough due diligence. And about 41% of them said that they would have paid less for that property had they known the problems that existed. Another item in this month's edition of Terry's Tips includes an example of the kind of things that we think that you as investors should be looking for, because you should always be on the lookout for events and announcements that make a location more worthy of your attention as property investors. An example of that we use in this month's edition of Terry's Tips is an event that was announced recently for the city of Ipswich in the southwestern suburbs of the Greater Brisbane area. And that was a federal government contract to build defence vehicles, a $5 billion contract that's going to create many, many hundreds of jobs in the Ipswich area, which has already placed its worthy of attention by investors and home buyers because it offers affordability, really good infrastructure, good transport links, lots of major jobs nodes. And this announcement has just added another strand to the attractive nature of the city of Ipswich for buyers, because events like this that create economic activity and lots of new jobs, out of that comes demand for real estate. So this is the kind of thing that we think that you need to know about in helping you choose the best places to buy. Another item in this month's edition of Terry's Tips talks about the fact that according to the census data, wealthy Australians are getting wealthier faster than ordinary Australians. And why is that? Not because that their wage incomes are increasing faster, but because they're investing. And it reinforces the importance of actually taking action and becoming investors, because that's how Australians grow their wealth, according to the evidence of the census figures, which show that the nation's top 20% wealthiest people are growing their incomes 50% faster than average households, and their net worth is rising at twice the pace of average households. Another item that we feature in this month's edition talks about the fallacy, the myth that areas that are considered to be problem areas, suburbs that are considered to be like lower socio-economic or have higher crime rates, have inferior price growth. We've at Hotspotting and at Property U, we've known this to be false because of the research we've done over the years. But there's been some new research that's come out from an organisation called Riskwise, which has found that in our major cities, many of the so-called problem areas, the ones with the higher crime rates, have actually outperformed the general market. They've had higher price growth in the last 5 years than the average market has, particularly those problem areas that are undergoing some kind of gentrification process. Now they include many examples. A couple of the examples they include in the Greater Melbourne area, the suburb of Frankston North, a very down market area down on the far southeast, has had growth of 102% in prices in 5 years. And the Riskwise research makes the point that suburbs like Frankston North are not unusual. Similar results can be found like that in each of the major cities. And an example they use in Sydney, in the western suburbs, is a suburb called Busby, which is renowned for higher violence rates, higher crimes of violence than is average in Sydney. And it has also outperformed the average in Sydney's recent 5-year spurt of price growth. We have another story about the APRA restrictions. You'll be reading in general media that there's been a slowdown on lending to investors, that it's harder to get loans as investors because of the APRA restrictions which were imposed in April last year. But our story makes the point that after a period of adjustment, which is always the case when APRA does something, there's a period of adjustment and then things get back to normal in the lending market. And we've arrived at that point now in terms of the most recent APRA restrictions. In fact, the story makes the point that the major banks are now competing very strongly for lending business from investors. They're cutting their interest rates, and they're competing strongly to get your business back as property investors looking to borrow money to buy investment property. In fact, Sally Tyndall from Rate City says it's war. The big banks are opening their books again. We also have a story making the point that media often misreports real estate issues, particularly around median price data, where they don't understand some of the vagaries and anomalies that often pop up in median price data. And there was a headline in one of the major papers recently that said home prices in these suburbs have grown over 30% in 1 year. They were talking about Hobart in this instance. And we make the point in Terry's tips that most of these places may have had that bigger rise in their median prices, but it doesn't mean values and prices are rising to the same degree. And it's caused by small sales samples. When you have a location with fewer than 30 sales in a year, median price data starts to become unreliable. And the smaller the sales sample, the more unreliable the median price data is. And so you've got to be very careful about what you believe. So one example was a location in Tasmania called Eaglehawk Neck, where allegedly the median price had risen 40% in the last 12 months, but there were only 14 sales in the last 12 months in that location. So the median price becomes very unreliable for such a small sales sample. Property values have not risen to that degree, anything like it really. And a number of examples in this article where the statistics presented were very misleading. Finally, we have an item where the Australian Competition and Commission, the ACCC, has done an inquiry and found that banks are actually slugging their existing customers more than their new customers. In other words, when the banks are seeking new business, they'll offer special deals to new customers, but they won't give those deals to their existing customers. So your loyalty to a particular bank or lender is not being rewarded because the new customers get deals that you as the existing customer don't get. And the ACCC inquiry found that on average in the last few years, existing customers are paying about $1,200 a year more on average than new customers because they're paying higher interest rates. And what the ACCC chairman, Rod Sims, is saying is that we should go to our banks and seek to negotiate a better interest rate deal. If they won't give it to us, switch to another lender, which will offer you a better deal. And I think it's very good advice. It's something we certainly recommend at Property U that people do. There's also reference to the reality that while the banks will have their advertised interest rates, they actually have secret discounts that they don't advertise. And if you don't ask, you won't get it. So it pays to go to your lender and ask them for a discount. And quite often you'll get one because the secretly discount interest rates are available, much lower than the headline interest rate. And if they won't give it to you, the ACCC recommends that you switch to another lender that will give you a better deal. So those are the main items in this month's edition of Terry's Tips. All sorts of useful and I think essential information that you need as real estate consumers. You need to know these sorts of things to be successful with property investment. Be aware that as members of Property U, you have access to the Property U website, which is a vast resource of essential information that you need to know about to succeed as property consumers. There are articles, there are fact sheets, there are how-to guides on all manner of subjects, such as where to buy, where not to buy, how to go through the process of getting a loan to buy real estate, how to negotiate with people when you're buying or selling real estate, and a whole host of other subjects. It really is a wonderful resource, and I urge you as Property U subscribers to take advantage of it. Please read this edition of Terry's Tips tips. You'll soon be getting next week another one of our regular newsletters of articles. But beyond that, use the website resource, the Property website, because you'll find it extremely useful. And if you plough through the fact sheets and the how-to guides and the articles on the subjects that interest you, you're going to become a much better informed and educated real estate consumer. And from that, you will get greater success buying and selling real estate. That's it for now. Terry Ryder from Hotspotting and Property U signing off. I'll talk to you again soon.